And let me now bring on board Mr. Shyam Srinivasan, Managing Director and Chief Executive Officer of Federal Bank. Mr. Srinivasan, Nikunj Dalmia from the Mumbai studio. Always a delight to connect with you. Before I get into specifics, first a word on the credit policy. And the debate we are having on ET now after the credit policy is that has Reserve Bank of India done the right thing by front-loading a rate cut?
Yeah. I mean, we've been calling for this, and I think it's a very bold and encouraging move. So as a banker and somebody who's beneficiary of this, we are greatly encouraged by this. And it's probably an act that was coming, and it's good that it came as a bold single step.
So now can I assume the obvious, which is Federal Bank will soon change their home loan rates, car loan rates and fixed deposit rates?
Yes, you can expect some kind of pass-through very soon. How soon we'll have to work out, but I do believe that in the near future there will be a rate change that is expected.
A complete pass-through, or you would not do a complete pass-through because you also have to protect your NIMs?
More than protecting NIMs, I think it's the cost of funds that matters for the bank. And we had actually cut rates by 10 basis points ahead of this a few weeks back. So I do expect something, but I can't quite comment whether it's the full pass-through or a part, but certainly I expect a pass-through soon.
Mr. Srinivasan, afternoon, you also had the RBI which proposed that banks should reduce their regulatory exposure ceiling to gold loan NBFCs to 7.5% from the earlier 10%. Now, you as a bank have a significant gold loan portfolio. Could you tell us how this guideline is going to impact you?
I think there are two things. The gold loan that we show on our portfolio is entirely lending by us to the end consumer. So it's not exposure to the gold loan companies. So for us, there is no implication on the policy that has bearing on the NBFCs. And even if you take the current exposure norms at 7.5%, we are way below that in exposure to the gold loan companies. So I see this as an upside for the bank. Our opportunity to lend on the retail is substantially better. Some of the recent regulatory changes have all influenced positively for the bank. So as someone who believes in the opportunity in the gold loan business, I think it's a very good outcome for the bank.
Shyam, on paper, a 50 basis point cut is a big and a bold move. But is it good enough to really kindle a strong capex/credit demand?
Yeah, I think if we didn't do the 50, you wouldn't make a start. I think this is a very significant and a bold move, like Uday also pointed out. Follow-through of this is a consequence of many things that have to happen in the market. I think the governor has adequately indicated the global scenario could have a bearing on future opportunities to cut rate. But if they didn't take this action, one would have to believe that the pro-growth stance the country is calling for wouldn't have been demonstrated. So I think it's a very appropriate, timely, and probably the best course of action that the governor could have taken. So I come away very encouraged, and it will definitely trigger the animal spirits that Uday was talking of. You will see substantial momentum because people are looking for a positive view, and I think this is a very good one.